want to learn how to manage your own investments? Are you ready to stop paying investment management fees and start building wealth? The DIY Investing Podcast is dedicated to providing you with the knowledge, skills, and resources you need to be a better investor. Learn how to make investments through the use of fundamental analysis, mental models, and business management insights. Now, here's your host, value investing expert, Trey Henninger.
Hello and welcome to the DIY Investing Podcast. My name is Trey Henninger and I'm your host. Today we have two great podcast guests, Jan Svenda of SvendaManual.com and David Flood of ElementaryValue.com. Please welcome to the show.
Thanks for having me on.
Hey, thanks, Trey. Thanks for having us.
So I think the best way for us to get started here is if each of you can give me kind of an introduction about who you are, what you do, and kind of your background with investing. So how about we start first with Jan and then we'll go to David.
Sure. So basically, I started investing about 10 years ago, and through the rocky road of value investing and different kind of styles of value investing, I ended up focusing mostly on the OTC market. About 3 or 4 years ago. And I started out as an independent analyst. I started writing for Seeking Alpha actually as well for a bit. And then I created my own newsletter, specifically focused on the OTC, because I saw the opportunities there and I was intrigued by it, and it made sense basically, the stocks that I was seeing and the situations. And I created a newsletter. I ran it for about 2 years, was sharing long ideas and basically creating a huge database of stocks that are meaningful in the OTC land. I mean, as we will get more into it, you will understand that there are some things in the OTC market which makes it harder to find interesting companies actually, because a lot of them are still pump and dumps. And so this newsletter kind of provided me with the opportunity to actually research the whole market, find some interesting stocks, and also create a database out of the stocks that are meaningful. And 1 or 2 years after, me and David basically decided to collaborate and create that database and make it online, because back then when I was running the newsletter, it was basically an Excel spreadsheet, which was not very useful or user friendly. And we got together and we basically created with another David, actually with the IT guy. We created online database of OTC stocks that I've covered previously in the manual and that David covered as well. So that's kind of our current focus, or where I'm coming from now as well. I do some short selling on the side, but from the OTC perspective, that's kind of my introduction.
Awesome. And how about we hear from you, David?
So I got interested in investing back in around 2013. I came across a video, Warren Buffett on YouTube, and found it quite interesting what he was talking about with regards to value investing and intrinsic value and margin of safety. So that prompted me to start kind of studying it a bit more. And then I discovered the work of Benjamin Graham. And from there, I got more interested in looking at net investing, which kind of led me to start looking at smaller and smaller companies. And then after a few years of kind of doing that, I started to come across people that were writing about the over-the-counter markets. So there was Dave Waters of Over-the-Counter Adventures and Dan Shum of No Name Stocks. And I found their work to be really interesting. And then I also came across Jan's work, the newsletter that he was writing about the over-the-counter markets. And I realized that this was a really interesting arena for private investors that were using small amounts of capital. It was a good place for them to look for interesting investments. I then started my own website, Elementary Value, where I started to write about these small companies that I was finding on the over-the-counter markets. And then more recently, I connected with Jan and we decided to kind of build upon the work that he'd done in the past with the newsletter and the Svenda's Manual of over-the-counter stocks. We've now collaborated and created a database where we've basically uploaded all the stocks that we've come across that we think are meaningful investments on the OTC markets, and we've kind of ranked them into different groups depending on how they report, and we've provided fundamental data for all the different companies as well. So that's really where my stories come from and where I am now.
That's great. So when we think about what we wanted to talk about today, we thought it would be great to cover some key topics here. And the first was, I wanted to discuss the product that y'all have developed, this OTC Manual, this database that investors can use to find stock ideas. And then I want to talk about a couple stock picks that can help people understand the types of businesses that they might find in the database. And then we want to end with discussing the SEC ruling on dark stocks, how that potentially affects some of the stocks in your database, how that potentially affects investors that are focused on the OTC market, which is really an area that I think individual investors can thrive with. So that's kind of the structure for our audience to understand what we want to talk about today. But let's begin with the OTC Manual, this product that y'all have created. What is the selling point here? I know a lot of investors want to help find stock ideas. So how can investors use this new database to identify companies that are worth investing in? And that's for whichever one of you wants to first take that.
I can start with that. So basically, the whole idea about the database is that the OTC market has one problem, and that is that it's large, and most of the stocks are not interesting. So if you go to the OTC market, the U.S. listed companies or U.S. based companies, basically there's about 7,000 of them. And most of those are just worthless. They're not really worth following because either they're shells or they're pump and dumps and these kind of things, just businesses that are not really that interesting. But I believe that there is about 400, 500 stocks that are worth following. And of course, that number kind of increases and decreases over time. But that's kind of like the fraction of the market which is worth following, from the reason that the stocks that are there in this group are actually normal operating businesses or perhaps legal opportunities or something where if you dig in to the story, you might find an investment opportunity. And so the whole problem to find those stocks, find those 400 or 500 stocks, is that the best way to go about that is to do A to Z research, as some OTC investors like to say, which is basically that you pull the 7,000 stocks, the whole basically list, and you go one by one, right? You just start looking into one in each stock and try to understand, whether there's some leftover opportunity or whether the business is still around and things like that. Just given the state of the OTC market, with a lot of the companies being dark or not reporting to the SEC and so on and so forth. So that's the best way to do that, because that way you cannot miss an opportunity, right? Like that way you can really understand the market. But that is, of course, is very time consuming, right? So only few people really can have the time to do A to Z, the most efficient way of going through the market. And that's where we thought, well, we both have a lot of the stocks that we follow that we believe are worth knowing about, that are meaningful companies, and we got the databases together. During the newsletter, as I said, I went through the market like 300 times through different ways, A to Z a couple of times as well. So the database that we have right now is about 450 companies, and that should be kind of the definitive OTC market, so to speak. Of course, it's not covering it's not covering everything. It's not 100%, but we believe that we've covered a large portion of the market, which is worth following. And so therefore, investors that look at the OTC market can purchase the access, and they will be given those 450 stocks. So if they want to go A to Z there, well, it's much more easy. easier than just going through the list of 7,000 stocks. So that's kind of like the key selling point, that you can save time on researching and finding your own ideas, of course, within the database. And you can see that on the trial database that we've set up. You can see 15 stocks or so, and just to give you a sense of how it works. You can see that there's some comments for the companies as well. There's fundamental data. There's some links that we believe are also worth knowing about when it comes to a company, because a lot of times it's just a mess to find information in the OTC market. And so we provide the user with a lot of additional information, additional context for each of the companies that are featured in database. So that's kind of like the bulk thing. I think some people might think that screening would work, and therefore the database might not be as useful. But in my experience, screening is really not working in the OTC market that well, because a lot of the companies are just not SEC reporting, and perhaps some of the most interesting opportunities were not reporting to the SEC. Therefore, they would not come up on a screener. So I think that's the kind of the ultimate selling point.
So, David, I know you, Jan has worked and published his OTC Manual before, but I know for you, David, you haven't published something in that way, in the manner before. So, how did you contribute to this database? I know you've published a lot on your blog about different stocks, but I assume this is extra information about either those companies or new companies that is, from the different stocks you've researched before, or how does that play into it?
Mm-hmm. Well, I undertook the challenge of going through the OTC markets A to Z like Jan did. So I'd kind of built up a separate list of my own in a private database that I had of all the interesting companies that I'd come across. And I found some things that Jan had missed, and Jan had found some things that I hadn't found. So together, we just decided to combine all the companies that we'd come across. So it was essentially kind of pooling our resources, putting together all the research that we'd come up with independently, so we could come up with a really comprehensive list of companies, which would be greater than what we would be able to do by ourselves. And then we also combined our efforts to add all the research, the commentary on the companies that we'd found, and we also shared any financials that we had for dark companies. So I think we've got access to around 50 financial reports for dark companies, which you can have access to on the database. They're not in the public domain at the minute, so that's quite useful for some of these companies that are dark, and you just can't get hold of the financials on the website, company website, or the OTC market. So it was a real group effort, really, of just kind of pooling our resources together. Some of the companies that I'd added were ones which I'd written up on my blog in the past. And then a lot of the companies which I added were just ones that I've owned in my own private portfolio, or I've had in my own private database. And they've been added to the OTC database that we've created. And then any other companies which I find over time. So I've got another 10 that are ready to be added, which we'll be adding fairly soon. We're just constantly going to update basically the database and add any more meaningful companies that we find out about, and then keep adding more kind of fundamental data points for the companies, and just developing it from there.
So what I'm curious to hear is, there's these 7,000 OTC companies, and you've whittled it down to about 7% of them at that 450 level. So kind of where are we thinking in terms of what are the key criteria needed for inclusion in your database? Because obviously the criteria for the general OTC market is, basically not on an exchange, anything that's public that's not on an exchange. So are we filtering based on quality? Are we filtering based on value? Are you filtering based on it doesn't seem like an outright fraud? So what are the criteria that is being used to include companies in the database, or exclude companies from the database rather?
I'll take this one first if you want. Well, from my point of view, I want to include companies which we have access to some kind of financial data for them. These could be the grey reporting companies where they're not filing with the SEC, but we've managed to get hold of financial data, or it's available on the company website. And then I also think we should be including, which we are doing, dark companies where we think there is some kind of interesting situation. Perhaps there's not publicly available financials, but through our research, we found out that something is happening behind the scenes in the company, or we have conducted some research that leads us to believe that there is some kind of hidden value there. And at some point, this value will be unlocked. So I'm sure you'll know yourself, Trey, that on the OTC markets, you can have companies that are kind of left for dead, that the market just assumes that the company is dead. And then suddenly out of the blue, they'll release financials, or they'll update the website, something will happen, and then the share price will just kind of explode. The company comes back to life, or perhaps they're in the darkness, and then the company kind of pivots and moves towards a new kind of avenue of business, or develops a new product and then comes back to the light. They become an SEC reporting company again. And then you see it so often with these companies where you'll have these turnarounds that happen. Now, if that was a listed company that had fallen on hard times, the market knows about it because all the information's out there. So there's no real edge for the small investor to have. But when it's these companies that are on the OTC markets and they're not listed companies, and the information's not really widely available, they're not really being followed by any institutions, these kind of changes can take place where you get these inflection points with companies where they kind of they move from maybe nearly going bankrupt or just kind of struggling along to improving. And if you can identify that as it's happening, you can really profit from it. A great example of this is Dan Shum's investment in Hemacare. They were kind of transforming in the darkness, and not many people knew about it. Unless you were closely following the OTC markets and the company, you wouldn't know what was going on. And then that stock ended up being 100-bagger. So we're kind of interested in looking at companies where we know they're undervalued based on the financials that we've got hold of, but also companies where we think something interesting may happen down the line and we think they're worth following. So we won't include things where we think there's signs of fraud, or it's just an outright pump and dump, or some kind of Chinese reverse takeover, merger kind of vehicle or something like that. We'll just kind of stick to companies where we think they're undervalued, or there's a possibility that they could become interesting investments down the line.
Okay. I mean, so Jan, I know I think you said that you sometimes short stocks. I mean, does that strategy play into what enters the database, or is your strategy similar to David's in terms of what's being put into the database?
Yeah, no shorting in the OTC space. It's a bit crazy. It can be interesting, and there was a very good Seeking Alpha user, penny stock realist, who covered the space quite well. But yeah, I don't do that in the OTC space. Regarding the inclusion to the database, I would have to agree with David. Basically, the undervalued part of the business, it can be undervalued on tangible book, it can be undervalued on cash flow, whatever have you. So of course, a stock that we believe is interesting and already a possible investment opportunity, we just include that. But also we include the companies that can be an investment opportunity in the future. So it doesn't have to be, undervalued right now, or it's kind of fairly valued, or there might be some further upside in the balance sheet or so, but might not be that clear. But we still believe it's worth following, and there are so many examples of that. So I think that's really the two main things that we do. And I think that David put it really well. Like I don't think that there is much more to the. There is no inherent rule regarding the inclusion to the database, because it's a fluid market, and you can kind of see, some dark companies might be an interesting opportunity because of a legal situation that is happening there, or there might be the dividend yielder. So I think we take everything basically that we believe is worth following. And for example, if you look at my Seeking Alpha or my previous research, you can kind of see what kind of stocks I'm picking, and that I believe believe, when it has a meaningful business or it's a legal opportunity or some sort of special situation, it's put there and people can follow it through the database. So yeah, I think it's relatively simple. There are no general strict rules, just because it can vary a lot, but it has to be meaningful.
That makes a lot of sense. So we're talking about basically this is for value investors specifically, and value investors that are willing to go into OTC stocks, willing to potentially go into dark stocks or gray stocks or gray market stocks, basically looking for overlooked gems where they can find value then.
Mm-hmm. I would agree.
Yeah, I think I would add just, every investor should be seeking an informational advantage. While that might sound quite tricky and quite complex in today's world, the OTC market does provide that opportunity to actually find stocks that are trading at some sort of valuation which doesn't make much sense if you learn more about the stock. And I think that that's been the recurring theme in the OTC market, where you can still find that. So that's kind of the basis of investing. I don't necessarily label myself too much as a value investor or anything like that, but just as an investor who's seeking informational advantage and knows more than the market, right? And in the OTC market, it happened to me quite a few times that I was not the only one that knew about it, the situation and so on and so forth. But obviously there was not many people that knew about the stock or about the information or about anything else. So I think that's the key when it comes to the OTC market.
So this idea of an informational advantage, I think the mainstream view is that informational advantages no longer exist. Do you agree that that's the mainstream view? Do you think that it's just that in terms of most people aren't willing to look at OTC stocks? Or how do you think that philosophy meshes with what we're talking about here today? David, you want to chime in first on that one?
Yeah. Well, I think a lot of investors have the approach where they're kind of screening for value. And screening for value traditionally just doesn't work for the OTC markets, because a lot of the things that you're looking for just aren't showing up on screeners. So a lot of the most interesting situations that you'll come across on the OTC markets are kind of, there could be turnaround plays, or there's some kind of legal event taking place, or there's a liquidation, or there's something happening where the information that's available has to be sought out. It's not kind of given to you on a plate. It's not readily available. It's not going to show up in a screener. So you really have to go and do your work to find this kind of stuff. And if you're fairly new to the OTC markets, you're probably not well versed in the approaches that you would have to take to kind of find this information. So the approaches that me and Jan take, we'll look on Pacer to look up court documents. We'll use Google Street View to kind of check out the company premises to see if they're still based there, count how many cars are in the parking lot to see if it tallies with any other information on how many employees they've got. We'll use all kinds of methods to basically try and eke out information on these companies to ascertain whether we think there's some kind of viable business that exists behind the stock. And none of this stuff is going to show up on a screener. So I think there's definitely an informational advantage in looking at these small companies, because the competition is a lot less. There's only really a few small value firms that maybe play in the OTC space, but most of the institutions, they can't really invest in this area because they're either prohibited by their corporate charters from investing in non-listed stocks, or they can't invest in companies that have a relatively small market cap. So those retail investors that are either inclined to conduct the research, or they are interested in following value blogs that focus on this space, they can kind of find out about this stuff. So our thinking with this is to create a kind of a comprehensive database where we're kind of tracking and covering all the interesting stocks within this area. And it basically kind of saves people a lot of work, because if you're going to kind of attempt to go through the OTC markets A to Z, it's going to take you, well, it took me several hundred hours to go through. and a lot of people just don't have the time or the inclination to do that. But that's only the way that you can find these interesting companies that aren't showing up on screen is to do that work. So our thinking is to provide a product where we do that work for you, and then it's kind of easier for people to then screen through the database we've created to look through all the meaningful and interesting companies. But it's still, at the same time, it leaves people free to pick and choose which investments may suit their kind of style, because we'll cover things where it could be a net operating loss stub, it could be a litigation stub, it could be a liquidation, it could be something that's undervalued on earnings or tangible book value. So there's a lot of different kind of avenues for investors to explore this space and pick and choose investments that kind of suit their style.
So, Jan, I know David kind of talked about screening, and that matches similar to what you were saying in terms of you have to do the A to Z research. And so this idea that A to Z research is very anti-screen. It's saying, no, you have to look at every stock before you can find the ideas. Is that the same way that you see screening? Do you use screening yourself in the process, or is it really you have to look at each individual company because a screen won't tell you the details?
Yeah, no, I think with screening, it's there are many challenges in the OTC space just because of the data. Missing data. There might be the great stocks, which are usually interesting, which are missing out. There are also SEC stocks which don't really screen well. For example, there is the Mills Music Trust, which is one of my all-time favorite dividend yielders in the OTC space. They pay great dividends from time to time. Nowadays, the share price is a bit pricey. I still own some, but it's a bit pricey since it increased already. But basically, this doesn't screen because they don't have any balance sheet. So, for example, if you are screening for something undervalued on the tangible book, well, you wouldn't be able to find them because they don't have anything. They're a trust which has musical royalties, and there's no employee. There's nothing. It's just a trust that gets the royalties and then they pay out. Yeah. So they have basically nothing in the corpus of the trust, so to speak. So this you couldn't, for example, find through screening, and so on, so forth, and so many other stocks. And I think coming back to also a bit of your question regarding the informational advantage and the mainstream idea that it cannot work, I think certainly that's probably what is happening. And David also touched upon why, or at least he touched upon some of the factors why the OTC space is not as known basically around for the informational advantage. Liquidity is one thing. I created one presentation about the OTC market, which kind of goes all over the initiation of the market, how it actually started, why it exists, and kind of why people are not so interested in it. And I identified myself like 4 factors. One of them is certainly liquidity, but the first one is reputation, right? So penny stocks, pink sheets, in the US especially, I think it has a relatively bad reputation. I mean, Wolf of Wall Street, right? So for people, this is not necessarily a market that they would have, that they would start looking at because they know it's not really, a great market to start with. Secondly, it's the obscurity sometimes. People just look at some things and they might be like, why am I looking at it? I really don't understand what's happening. And if they do the research, they would understand what is the situation. But a lot of times they would just ask, okay, why am I looking at this, right? And then they would just stop. So that's just another factor, obscurity. And then of course the data, because sometimes you have to be crafty on how to get the data or how to do the research, or creative. Let's say David again mentioned that with bankruptcy filings, some sort of corporate filings as well that are not necessarily the most straightforward source for investors in the public market. So that's also another challenge for people who then say, okay, the OTC market is not really for me, and therefore again it opens up opportunities for the informational advantage for the people that are looking at it. So these are just some of the factors, and I think that for the screening, it just kind of doesn't work that well, especially because some of the factors are actually affecting the screening itself, and just by the fact that there are only so many companies that report to the SEC. In our database, it's the split is roughly 100 dark companies, 100 gray stocks or a bit more, and then 100 SEC stocks that are reporting to the SEC. And then we also have a nice amount of community banks, because community banks is also a specific opportunity in the OTC market. So we kind of I went through the community bank space very closely during my time in newsletter, and I also created a portfolio of community banks, and so some of them are in the database as well. So so that's kind of providing that the best way is to A to Z, go to A to Z. But then why would you do that if the database is here? Of course, it's always better to make sure that you are looking at the market, trying to find some new stocks. But this database is a great start.
So, David, one of the things that Jan just mentioned was kind of reputation. And what I'm curious is your views on what do you think people misunderstand about the OTC market and OTC stocks?
Well, I think probably before I started to look at the OTC markets, the only thing I really knew was like Jan mentioned earlier, like the pink sheets. You just kind of think of Wolf of Wall Street or some kind of like penny stock fraud. You kind of assume that any of these companies where the shares are trading below $1 or they're not kind of listed companies, you just kind of assume that maybe it's kind of it's going to be wrought with fraud and it's highly risky, more risky than investing on with listed companies. And obviously there's quite a few frauds and pump and dumps on the OTC markets. The SEC and the OTC markets group are trying to kind of solve this problem. So there are some risks, but then equally, I think a lot of people miss the fact that within the OTC markets, it's such a broad arena. There's companies on there that are kind of 100 years old or more, and they've been kind of issuing financial statements for decades. They've been paying dividends for decades. They provide audited financial results to their shareholders, every year. So there's lots of really interesting companies that have kind of found their way onto these markets. Some of them used to be on the major exchanges, or some have just never made that leap up to the major exchanges, but they're on the OTC markets just because it's a cheaper alternative, because the costs to become a listed company are quite high. So if you're a small cap company where you're not generating huge amounts of revenue and earnings, it's just not worth bearing those costs to become a listed company when there's an alternative to be on the OTC markets where you still have access to capital from retail investors. So I think once people start looking into the OTC markets, they'll realize actually it's a really interesting place to look into. And a lot of people don't realize that when Warren Buffett was starting out, he would go through the old pink sheets. He would look through them, because back then it was all kind of just on paper. There was nothing on no computers and stuff. And he would go through, like we have, A to Z, looking for interesting companies, and he found a lot of really interesting investments doing that. But obviously nowadays there's a lot more information available, and then with the service that we're providing, we're kind of going through and selecting all the interesting companies and separating the wheat from the chaff. And providing a database where people can kind of find out about these companies, see what kind of valuations there are. We provide access to financial reports for the dark companies, and then also provide a commentary so people can get an idea of the types of companies that they'll find on the OTC markets.
Well, I think it's an interesting thing that people sometimes miss, is that just because they're on the OTC doesn't mean they're small. Because I know I was in an argument with someone on Twitter one time about like, well, if you're investing in non-SEC reporting companies, then it's just fraught with risk. And I was like, well, have you looked at CSVI, which is $1 billion market cap company and has been paying dividends for decades, and is high quality and all these things. And I see it's also in your database. And it's a company that trades on the OTC markets, and it's not that it's not risky in the way that people think of penny stocks or the Wolf of Wall Street type stuff. So I think that's an area that people sometimes overlook. Yeah, I was wondering if you could expand a little bit about community banks and kind of what you look for in the community banks that might be involved in the manual, because when you think about the 7,000 stocks on the OTC markets, I know that there's like at least 3,000, I think, community banks in the United States. Now they're not all publicly traded or whatever, but so a lot of those OTC stocks would happen to be community banks. So it makes sense that this would be potentially a significant part of the manual. So I wonder if you could speak a little to that.
Yeah, sure. So basically, there is, in my recollection, about 500 or 600 community banks in the OTC space, maybe a bit less. I don't really remember the exact number, but I used to have a list of all of them. And basically, I think it's about 500, so to speak. And basically, the community banks are interesting because, well, that's actually the opposite of some sort of pump and dump. I mean, some of the community banks just earn, the same amount and, don't really get affected by any crisis and so on and so forth. A lot of them are very conservative. So that actually is a whole another subset of OTC investing. I think a lot of people are not even considering it as OTC investing to some degree, because even though some of them are liquid, so they're not as easy to buy, the reporting is always there because of FDIC. So it's much more, let's say, transparent in that manner, and you can kind of calculate all the financial ratios and so on and so forth. And this is helpful in the OTC space because it can provide you with another kind of sector which is maybe less volatile and let's say less obscure, and can provide you with, let's say, the more typical investment opportunities that value investors might be used to. And what I've added to the database are basically community banks that have been trading very near their tangible book. So it's either slightly above or below tangible book. That was kind of the main thing that I looked for. I also looked at earnings, but it had to be kind of also reasonable on valuation on the tangible book. So that's the story behind the community banks there. And there is about, as I said, 100 of them, and usually they're a bit smaller. The ones that I selected, a bit more obscure, but I mean, some of them are incredible. I mean, you have, for example, UNTN, which is one of my favorites. Is this bank just no COVID-19 impact, no financial crisis 2008 2009 impact, and so on and so forth. These are just highly conservative banks, which yeah, sure, of course, it's not gonna get you a 50% return in 1 year, but since it's well run and they know the community and they know who they serve, I mean, this is in my view a solid community bank. So there are examples of that whereby the banks are just super conservative. Some might, of course, believe that it's just to their detriment because don't grow as much and so on and so forth. But community banks have one catalyst, which is acquisition. A lot of the community banks that I looked at have been purchased by other community banks and so on and so forth. It's not as often, let's say, but it still happens. So it's a interesting sector, and we are certainly actually thinking of preparing some extra features for the community banks in the database itself as well. So I think for people that might be a bit less interested in the obscure and the liquid, you can start with community banks, and you can actually look at some that are still interesting and are also still growing. There were some banks that grew that I was looking at during the newsletter times, 2-3 years ago, and they were growing quite well. I was always a bit skeptical with bank growing in these kind of times, but yeah, nonetheless, it's a very interesting sector. So community banks certainly worth it.
Okay, so I think an interesting piece of this database, as I dig into it, is that you have a commenting function.
Hello?
So Oh, yeah, muted myself again. Oh, man. So I think an interesting piece of this database is that you have this commenting function where it seems like the idea is to facilitate discussion as each new person in the database can contribute comments. Is that right? So like I can add comments to the database and say, I've looked at this company, it does seem good, or questions, and then other investors can chime in. Is that how it's supposed to work?
Mm-hmm. Yeah, that's the intention behind it, because we thought just a static kind of database where there's no ability for the users to kind of interact it's not as interesting, it's not as fun, and I think it can be quite lonely as well when you're looking through the OTC markets. It's not as if there's kind of everyone else that's around you in the investment community is looking at these stocks. It's quite a niche thing. So having the ability to connect with other OTC markets investors, I think, is a really good thing. And also the fact that often with these companies, it's hard to come by information, or often I'll write up a company on my own blog and then someone will contact me with other information that they've managed to find out. So we thought that it would be a good feature so people can interact and share information. And then over time, that will kind of grow. So each company, there'll be an interesting kind of backstory recorded with the comments. We'll have our commentary, and then we'll also be updating all the fundamental data for the revenue, the earnings, the tangible book value. So our aim is to just make the database just become better over time. The more people that join, the more people that use it, the more stocks that are added. It will just kind of keep increasing in value, the proposition that we offer for people.
So how do you think your database is best used? If you have someone that's interested in signing up for the database and they just signed up, what is the first thing they should do? How should they think about using this database to improve their investing process or come up with ideas? So what would you think that your target customers should be using your database for? We'll start with you, Jan.
So I would say that the best thing is probably to start screening, because actually our database has some fundamental data and has also price action. So basically the screening in our database makes sense as opposed to screening without the database and screening the whole market. We do have PEPS, so basically price to sales and price to earnings. Now, of course, not all of the stocks will have this data because some of them are dark and we don't have the most up-to-date financials. So let's say we have financials for 2019, but we're not really super sure what's the current situation. So we're not going to put it there. But for the companies that have, available data, we do have PEPS. We also have tangible book value. So of course, then you can kind of see price to tangible book value. So these are already kind of like the basic screeners that people can run and can see, okay, why is this trading at such a huge discount to tangible book value? Or on the opposite, why is it trading at such a premium? And they think it's interesting, or PE and price to sales as well. So these are the fundamentals. And then the price performance is interesting, I believe. We offer 3 time frames. We offer 5-day performance, 90-day performance, and 12 months performance. And so people can start screening, for stocks that have gone up a lot, have been down, and so on and so forth. You can just kind of play around with it. So that's, I think, the best way to kind of like start and use the database, because then you can kind of narrow down stocks that you might be interested in. Of course, there's also screening for reporting. So basically you can say, okay, I'm interested really in the dark companies. So you can just set up the database to show you only dark companies, and you can start with that, or whatever. There are sectors or so you can search whether you want financials, real estate, consumer staples, whatever have you. And so there's many ways to kind of like narrow down what you are interested in, and the screening for the fundamental data and the price performance is basically actually, I think, the one of the best ways to start. But for of course, the people that want to take a serious amount of time doing the research, then they can just go A to Z because it's only 450 companies. It won't take you that much time, and there's a lot of context for each of the companies that we provide. And also, you can we do sell my previous research, so we do sell the manuals that the oldest one has about 800 pages of research. So if you want more context for each of the companies, you can also purchase that on top of the database. So the database has some initial comments, but if you're looking for more context, that can also help.
Do you have anything to add there, David, on how you think customers should use your database?
Yeah, well, there's a certain type of investor, which includes myself and maybe a few other people, who, when I use a screener, even for listed companies, I'll basically just look at the smallest companies I can find and those with the lowest share count. And then I will go through each company one by one. I screen, so I only look at companies that have a market cap of $10 million or less. So another way that you can use the database is to just screen based on the lowest market cap or the lowest share price or the lowest shares outstanding, and then kind of work your way up. Because often it can be interesting to look at these really illiquid situations, because if you can find one where the company is undervalued, or it's at some kind of inflection point where there's some change taking place with the company, and then you can build a position in the company, then when people become interested in the company, or the market becomes aware that it's undervalued, or that something's happened, something's changed, which has prompted more people to become interested in it, that can really prompt the share price to move up quite dramatically. So I kind of like to use that approach when I'm going through this screener, is just to look at the smallest and most illiquid stuff that I can find. Equally, you can kind of look, you can do that in reverse, where you look at the most expensive stocks, because often this can kind of put a lot of people off. Some people psychologically, they don't like to put a lot of money into one stock. So you could look at companies where the share price is like, $1,000, $2,000, $5,000, $20,000 or whatever, and kind of work your way down from there. And equally, you'll often find with those companies, some of them are quite undervalued just simply because the share price is so high. So that's kind of two ways that I would use it as well.
Yeah, so we can buy companies that have $20,000 or $95,000 as prices for what a single share can cost in this database. That's pretty interesting. Mm-hmm. So what I think it's a good time to move on to talk about some stock picks. So I'm going to ask each of you to kind of showcase, stock idea, give a little background about it, and what a general thesis is or what makes it interesting, so that my listeners can understand kind of the types of companies that they might be able to find within the database. We'll start with you first, Jan.
All right. So I will certainly give one or two stocks that I believe are interesting now, but maybe beforehand, I would give you an example of a stock that worked out really well, and that I believe is a great showcase of why OTC works, why the database works. And this is Gainsco, GANS. I'm not sure if are you familiar with that, Trey?
I'm familiar with the Gainsco. They're the ones, the Texas insurer, I think.
Yes.
Yeah.
Yes. Do you so you know the story as a stock, or?
Yeah, but my listeners probably don't. So it's
okay.
Good to cover.
Fair enough. Yeah. No, so this is a great example, because actually when I started my OTC research in 2016-17, I went A to Z and I stumbled upon Gainsco, and at that time this insurer's kind of specialty car insurer, was trading at insane valuation of below tangible book, 50, maybe like 0.5, 0.6 the ratio was, and free cash flow was just very, very strong, 2 times, 3 times or something like that, and they were growing. And I found them, they were gray, or actually in the OTC market they were labeled as dark, which was an error, because it was actually not dark. They were providing financials for investors on their website, and they were also audited, and of course it's an insurer, so you can always check the insurance subsidiary as well. So if you ever want to do research on insurance subsidiary, of course, in the US, you can go through the regulator basically, and they would have the insurance subsidiary financials, so you can also see that. So Gainsco would provide that, and they would also provide audited annual statements for the whole company, for the holding company. So you knew really what's going on, what's the share count, what's the situation. And, I started looking into it, and I just said, well, what's wrong with it, right? I mean, what's the valuation? And I just couldn't find anything. Like, I really didn't find anything wrong with it. Of course, they were operating in the, let's say like a niche market, and the company was undergoing a turnaround, basically, which started in 2011 or 12. That was driven by its management team. And so they had some troubles, 10 years ago or so. But now it seemed or at that time, it seemed like a great opportunity, and there was really no other reason to not buy it. And so I even wrote about it on Seeking Alpha when it was like $18 or so, saying, "Hey, I don't really know why it's trading at such a thing." I couldn't really find anything. There was just one thing, that the customers were not really super happy with the customer service of the company, but the official comments or official actions were none against the insurer. So it seemed like, okay, well, these might be disgruntled online customer reviews, but I mean, there are a couple of companies that have that without any sort of impact on its on their core business. And so I wasn't really able to find much, and it went up like 100% just because of trading, really, and also they released some special dividends. So the cash flow was actually getting back to the shareholders as well. And then in September of this year, they got acquired for about $100 a share. So there you go, and that was a great story. And I think it just showcases, like, there was no reason for this company to trade at that valuation, and I simply believe it was forgotten. And some people that I know from the OTC space, and the community is not that large, that have been going through the market a lot, they didn't know about it. And I was like, wow, that's really what you can miss out on if you don't do the A to Z research, or of course nowadays if you don't buy the access to the database, because you can just miss out on easily on things that were not obscure, that were understandable. There was no sort of a trick to get the financials or something like that. This was trading at above $10 a share. It had volume relatively. Of course, there are some constraints and liquidity and so on and so forth. But basically, it was relatively a normal stock and a normal company. And the market cap was, I don't know what, like 50, 60, 70 million maybe at the start, and now it's like 300 million or so. So it wasn't even that small. So that's just one example of why I believe OTC works, and why going A to Z and having access to database also works. So that's just a quick example, but I believe that from the companies that we have in the database, I spent a lot of time in the dark space, so I did try to get financials for a lot of the dark companies and so on and so forth. So there are some interesting stocks there, but I think nowadays, even with the valuation, it can be quite interesting in the gray space or SEC space, just because the March downturn happened, and while many of the stocks rebounded very quickly, which is like Callaway Nursery, CLWY, that was like from $4 to $8, and it went to $4 just because of the COVID crisis, while it was a gardening store, and they were not really impacted that much. So I think that the valuation in March still created some opportunities. And so therefore, for example, my current favorite is Reserve Petroleum, or a stock that I believe is worth following, let's say, just because of the valuation. It's an oil and gas company. So of course, oil has been battered down, and the price is not really that attractive right now. But Reserve Petroleum was actually able to create operating cash flow in the past 6 months. So they made about $1 million, which is pretty good. At the current prices, it's a relatively small company, and the current market cap is about 20 million. Which means that on the cash flow side, it might not be that interesting, in terms of how much they can actually earn. But when it comes to the balance sheet valuation, I mean, that's really interesting, because they have about 18 or 19 million in cash and treasury bills. and they have no liability, so to speak of. So basically, what you're getting is you pay 20 million for a business that owns almost all of the market cap in cash, and then you have still a business that is operating operating at a profit at the current oil price. So I think that that's just quite interesting, and it was sold off in March and never really rebounded. Of course, you would have to do a proper assessment of the oil wells to be completely sure about the valuation. But I think that whatever happens, it's a stock that's worth following. So that's kind of my favorite currently that I believe is worth following.
So that's RSRV. Is the ticket?
RSRV, yes, exactly. The market cap is about 21 million. I believe the cash is about, the tangible book in the database is 30 million. So they're trading at a pretty significant discount, and it's there in the database. You can see the net income as negative, but that's actually because they took impairment charge on their assets, but they actually made money. So they just, of course, prudently took impairment on their ONG assets, on the oil and gas assets, just because of the low oil price. But actually, on cash flow basis, they made money. So it's been one of those sleepy stocks that I've looked at quite a few times in the OTC space, and I kind of never liked it that much just because it was trading above tangible book and it was kind of throwing out cash, but not so much. But right now, the valuation, I think, is quite compelling.
So for that company, they operate in the U.S. and they're just a standard oil exploration type company?
Exactly right. So this is a US-based company. They have a very funny website that looks like it's been made in '90s, which I think it was, and they never really updated it. I think it's the classic case of conservative OTC management, and I think it's worth pointing out and worth following.
That's always the best sign. If your website looks as bad as Berkshire Hathaway's, now you're on to something, right?
Or it can be very bad, but usually it's like there's an extreme outcome out of that. That's for sure.
It's going to be on one of the tails. It's either a positive or a negative tail. No, I think that's a good example. David, do you want to share some examples?
Yeah. So what I'll talk about first is Ecc Capital Corporation, which is ticker symbol ECRO. Disclaimer: I own shares in this company. So this is a company that I actually came across when I was working my way through the OTC markets. And it, on first appearance, it didn't really look like it was interesting, but then a much smarter investor than myself reached out to me after he'd kind of seen that I was interested in these small OTC stocks. And he shared some kind of research that he'd conducted on the company. He realized that there was probably some kind of hidden value there with the company, but the market was just assuming that this company was dead. So they were a former mortgage REIT that kind of they got destroyed in the 2008 financial crisis. They were just kind of obliterated. They were involved in some litigation in the later years, and then everything kind of went dark. They stopped issuing financial reports, and then they stopped basically just issuing any news whatsoever. So they went completely dark. No one knew what was going on with the company. But this gentleman that I referred to earlier, he conducted some research and realized that they were still kind of receiving income from some interest that they had in some securitization trusts. So long story short, he kind of built a position in the company, and some other investors that follow OTC stocks were becoming interested in the company as well. And then it turns out that someone kind of reached out to management and suggested that it might be useful for them to start going public again with the financials and kind of letting investors know what was going on with the company. So, I mean, when it was dark, it felt kind of like it was trading at like 1/8 of a cent or something. And then they released financials, and it turned out they had like 7.7 cents in net cash and like 15.4 cents in tangible book value. And the share price kind of exploded. It just ran up like 10x because the company kind of released the fact that it was sat on some serious assets. And and a lot of investors that were obviously paying attention kind of jumped in and bid the share price up. But since then, interestingly, it's kind of drifted back down. So it's still selling below net cash, even now, even though it's kind of like the information's there, because you've got to kind of go onto the company website to find the financials. It's not something that's going to show up in a stock screener because it's kind of it's not SEC reporting. But another interesting thing with this company is that the website will not work if you're trying to access it from a non-US country. So if you're anywhere else in the world, if you're trying to access it from Europe or the UK, it's not going to work. You can only access the website if you're in the US. So you need to use a VPN if you're from another country to get access to the website to look at the financials and the news and find out what's going on with the company. So that's one company that turned out to be a great investment. And then another one that I'll talk about is EQTL. Disclaimer, I'm long this company as well. This is Equitel International Corp. This is one I've written up on my blog in the past. Now, this is not what you would call a value investment because it's not cheap based upon the current numbers. They are releasing limited financial information at the minute, but they're not kind of releasing full financial information. So the picture's somewhat kind of grey at the minute as to what's going on with the company. But I became interested in the company because it's a turnaround play. So a new CEO took over a couple of years back and he started to kind of turn things around with the company. I'll just mention what they do. They make these fiber optic devices that can be put into machines in warehouses and various things, and they can monitor they can monitor, say, paint or food or plastics while they're being manufactured to test the viscosity or the color. They can sense all these different kind of things, and then they can relay that information back in real time. So it kind of helps companies cut down on waste. If the production line goes down because there's been a mistake with the production, they kind of help that all be regulated better. And they'd had a lot of problems in the past because they kind of got locked into this agreement with a German startup company that was their licensee for, I think it was parts of Europe. And the customer base were not interested in the product at the price that it was being sold at by the licensee. There was a lot of problems going on with the company anyway. But the guy that took over, he basically relocated the operations back to the US. He moved the headquarters. He's basically established a sales force across the US. He's now intimated in the most recent Q3 report that they put out that his intention is to kind of go current reporting with the company by, I think, the end of Q1 2021. So these kind of companies interest me because anytime there's a change where there's a company that's been assumed to be dead or kind of it's been left for dead by the market, they assume nothing's going on. When these companies turn around in the darkness and they kind of improve operations, if you can get in early enough with these companies, you can do quite well because you can establish a decent position and then just kind of ride the share price all the way up. As the company comes back out of the darkness, it becomes a reporting company again. Operations improve, they start to generate revenue and earnings, and you can benefit from that. So at the minute, it's not cheap if you would look at it based on price to sales or PE or anything like that, but it's an interesting company to follow, and certain investors like myself, and I know Dan Shum takes this approach, we like to find these companies where they may not be cheap at the minute, but we have an idea of about what the potential value of the company could be if things go in the right direction. And often with these companies, when they're kind of left for dead, you only really need a couple of things to go right for it to really move the share price up. So a lot of the companies that we have that are dark in the database will be these kind of situations where we found out that there's some kind of transition taking place with the company, something's happening, but the picture still isn't clear, but we have the information, we can demonstrate that there's something happening with the company. So yeah, that's an interesting company that I would recommend people follow.
David, that stock chart is terrible. EQTL. Yeah. It's probably your favorite type of stock chart. So for anyone who wants to look up EQTL, just look at the max chart. It's like a negative 99% from 2001 or 2000.
They're the kind of stocks that I like to find, where it looks like the right-hand side of a bell curve. It's just kind of, they're always the best ones. Right. But you'll see that with a lot of these companies when you'll look at them and nothing's happened, but then the share price will then kind of run up massively. You saw it with like Affimax recently, AFFY. Another one that I owned, which was completely dark, Bright Strike, BSTK, that kind of ran up. I think it went up 60x in the end. So you'll find with these companies, when they're just kind of left for dead, any kind of positive news that emerges or any signs of a turnaround or the release of a product will, send these stocks up. Now, traditional value investors may not favor this kind of approach, but there are some investors that like to look at these types of situations where it's essentially a turnaround, or it's semi-speculative in some ways. But I like to think of it as kind of thinking about what the future value could be with these companies. And it works well, probably more for the deep value guys that buy a large basket of stocks. Obviously, you're not going to put all your net worth into one of these companies, or even maybe like 2 or 3 of them. You're more likely to buy a basket of 20 or 30 of these things, and you'll do quite well from it.
Yeah. So for anyone listening, in 2000, May of 2000, the stock was trading at $1.35 per share. By 2009, it hit 1 cent, and it's still at 1 cent. Basically, for the last 11 years, it's been at 1 penny. I mean, this is a terrible chart. Everyone should look up EQTL, at least on the chart, even just the chart, because it's just, if you want to understand how David invests, he loves these charts.
I should stress it's not cheap on the numbers. Like the numbers they're putting out at the minute, it's not kind of cheap on a traditional value basis, but I'm kind of thinking ahead of where could this company go if things go right and the turnaround happens.
So when you think about a company like this, where do you think it can go if you're willing to share? I mean, you say the numbers aren't great. I mean, its market cap is $1 million, basically, if I have the numbers right here. So like, is this have a potential to be a $5 million company, a $10 million company, a $50 million company, or what are we talking?
It's hard to say really without, I mean, you could conduct, I'm not a big fan of conducting these kind of analysis where you'll go and look at what's the potential market for their products and all this kind of stuff, because I think you can come up with any figure that you want. When you start going down that road, you'll just kind of find the figures that justify the picture you've got in your mind. My approach with these stocks is, can it get any worse? No, it can't get any worse with these companies unless they go bankrupt. But you'll see with these stocks where they've kind of drifted down to virtually nothing, and then they hit support, and they just kind of bounce along, and the share price isn't really drifting down much. It's not going up much. And then that's an interesting time I find to buy these companies, is when there's some kind of transition happening in the darkness. Like, I probably wouldn't buy a meaningful amount in this company if I hadn't found out the fact that there was some kind of change going on with the company, if that makes sense. You can see there's evidence that there's a new CEO who's taken over. He's taking a lot of steps to turn things around with the company. The things that he said he was going to do, he's delivered on. So when you see those kind of things happening, then you'll think, well, maybe it's worth investing in this kind of situation. A basket of these kind of turnarounds could work out quite well. Where could the stock go? It's hard to say. I mean, it could become a $5 million company. It could be a 10 million. It could be a 50 million. I never really kind of imagined where it would go. I just kind of take the situation for what it is and then just kind of assess it as it goes along. I'll just watch what happens and kind of judge it from there. If management keeps delivering, things keep improving, then you just kind of hold the stock and watch where it goes.
I think that the examples that the two of you have provided here really provide a good example of the diversity of ideas, both that you can, find in this manual, this database, so that people can understand the different types of things they might find, but also that the stocks available are going to appeal to different types of investors. For instance, I always love reading about your style, David, and then, but it's got to say, like 85-90% of the stocks you write up, I'm always like, I don't know, I have to hold my nose just to read the investment thesis, because it's not my general style. But it shows that there's plenty of ways to make money, and of course, I think your performance is absolutely destroying mine. So each to their own. But I think both of you have brought up key ideas here about the idea that you have companies that may be dark market or gray market or overlooked for reasons like this that might not be in the SEC space. So I think this is a good time to transition to the third key topic we wanted to talk about today, was this recent SEC ruling on dark stocks. And so the SEC put out a ruling maybe a month ago or 6 weeks ago, something along those lines, that basically says something's going to happen with dark stocks. Dark stocks can no longer be traded or listed or quoted in the way they have before. So maybe one of you can give a kind of a summary of your thoughts of what this SEC ruling means, and then we can dive into how is that going to affect investors like us that are interested in the gray market and the dark stock market, and what that's going to do to the opportunity set.
Mm-hmm. Well, I'll take first dibs on this one. Well, as I understand it, any company that's not deemed to be current in their filings, so they're not reporting every quarter, they're not adhering to these kind of requirements. So these could even be kind of limited info stocks, where they're maybe only reporting once every 6 months or once a year. If they're not current in their filings, then they will basically be moved onto the grey market. So the SEC is saying that brokers will be prohibited from issuing electronic quotations for these stocks. Now, there's some talk that perhaps an expert market will be created for these companies. So you may find that only accredited investors can trade these stocks. That's not determined yet. I suspect what's going to happen is that they'll actually all just be moved onto the grey market, and then maybe some of these companies may find their way onto another market which could be created. I think this is an idea that's being suggested by the OTC Markets group as a way to allow some of the small value firms to be able to trade these stocks. I'm not convinced that it'll solve the problems that the SEC thinks it's going to solve, which is to kind of combat fraud and stop retail investors from being defrauded out of cash. Because a lot of the pump and dumps don't tend to be illiquid dark stocks that don't trade for like weeks or months on end. They tend to be a lot more liquid, and often they might even be current in their reporting, but they're still kind of just shell companies. You'll find a lot on the pink sheets that are current that are just these shells. There's no meaningful operations, but they're just kind of vehicles for pump and dumps. So I'm not convinced that really this move will actually fix the problem that the SEC is trying to address. But the interesting thing, I think, is that moving all these companies onto the grey market may actually present more value opportunities, because I think a lot of people will kind of panic initially and think, well, I don't want to own companies that are on the grey market. It's there's no bid ask spread out there. I don't know what people, because when you're on the grey market, it's essentially brokers that are going to trade this stuff. They'll have to like pick up the phone and find someone that's willing to buy if you're wanting to sell. So for people that are not afraid of holding illiquid stocks, this could actually present more value opportunities. So a lot of these stocks will probably just drop in price when all this stuff happens, because people no longer want to hold them. But yet the companies behind these stocks often are perfectly reputable companies. They're issuing financials audited often on their websites. They've been around for decades. You can speak to the management. Often with these tiny companies, I'll email them and I'll speak to the CEOs directly. So I actually think, there could be an opportunity for people that are interested, if they're willing to trade on the grey markets, that they'll be able to trade these stocks. So the issues that I think that are going to happen with it is, if these stocks are moved onto the grey market, there will be no bid-ask spread available. So price discovery will be impaired somewhat. They'll probably become more illiquid, because there's going to be less people holding them, less people trading them. Now, for some people like myself, that's not an issue. I actually like to hold illiquid companies because I like to build a position when they're illiquid and then sell when the liquidity arrives, when some catalyzing event occurs. it's a personal preference for investors whether they're willing to kind of trade these stocks when they become more opaque. But I still think the businesses behind these stocks should be judged, rather than just thinking about the stock itself. Think about, well, what's the company behind this stock? So if you own a stock in a quality company that you're happy to hold, do you mind whether it's trading on the grey markets or whether it's on the New York Stock Exchange? Personally, I wouldn't. Obviously, there is the consideration of if you need to access the capital that you've put into that investment, it's going to be tricky if it's on a grey market, but that's obviously a decision that you have to make. My concern if they create this expert market is that you will have to jump through some hoops to become an accredited investor. Initially, it seemed like you would have to have a certain net worth to be able to qualify as an accredited investor, but I think you could sit your Series 65. I think there's some exams that you can sit to get a license, and then you'll be classed as an accredited investor. It wouldn't really matter whether you have a lower net worth. Now, again, some people may not want to go through all that hassle, but then that could present opportunities for people that are willing to do that. I'm less convinced that all these stocks that are non-reporting or that are grey reporting will find their way onto the grey market. Will find their way into the expert market. I think what's most likely is they'll just end up on the grey markets. And obviously that's a personal preference for people, whether they are still willing to trade them.
What are your thoughts, Jan, on kind of how this is going to affect investors, pros and cons, kind of like how David talked about? What issues do you see with how this is going to play out?
Yeah, so I think that David covered it really well from the technical standpoint and the possible scenarios that might occur. I don't think it's the end of the dark market. There will be a way to trade that, hopefully. And if there are some additional hoops, that's what it's going to be. And of course, it can also, again, create opportunities because people will, not everyone will be able to do that. And so it might, become even more illiquid and harder to get, but there might be some access. So I think from the technical standpoint, he kind of said everything. Of course, I also agree that the SEC is completely in the wrong here. I mean, they don't understand what they're doing, basically, because they're empowering companies that have been dark, even, though they are public. So a lot of the dark companies are just basically acting as if they don't have any public shareholders. And they're just going to empower those companies to continue to stay in dark while, there are public shareholders who have the right to get the financials. I mean, I myself had some phone calls with managements who just, hang up the phone on me because they just didn't want to talk to the shareholders. So, I think the whole space is not for the faint-hearted. So it is a tough space now, and it might be tougher in the future. But in any case, it's a very specific market, which requires investors to be patient, to have no problems with illiquidity, and to have no problems with corporate governance. That can be quite questionable sometimes. The management are just not going to talk to you. Now, this does not mean that the companies are somehow scammy or something like that, but a lot of times the companies are just family companies who want to stay in the dark and don't want to be bothered by public shareholders who might wake up to realize that they have some rights, as minority shareholders. So I think that that's kind of the main thing that I see from here. It's never been an easy market. The corporate governance can be quite tricky to nail, and of course, the SEC is just going to make it worse by doing these things while they are combating fraud. I mean, come on, this is just the dark companies. It's like it would be the stupidest way to perform financial fraud, because like you're hiding the fraud, right? You're just saying, we don't want you to see what's going on. That's like the opposite of the fraud approach, right? The fraud approach is pump and dump. It's just like talking about the results, which are not necessarily there, but they showcase, transparency or something like that. So it's really the opposite. And I think that if you look at the SEC comments that people provided for the ruling, so before they came up with the somewhat vague response to all of this. There was a lot of comments from skilled OTC investors who argued very well that the ruling would be completely misguided, and that there's a lot of fine companies even with fine corporate governance that are just trading in the dark space because they don't want to spend more money on on SEC reports and so on and so forth. So I think that if anyone is really interested, they can go through the comments and they can find people that are superstars in the OTC space, people like Jim Rivest and these guys who have been doing this for a long time, and they know what they're doing, and they know that there is opportunity in the dark market for many reasons, and that this ruling is not really that great. So I mean, from this technical standpoint, let's see. I don't really have a crystal ball, but I think David has a very good grasp of what could happen. And if it means additional hoops, I mean, I know that some people will just go through with it. And let's see what the SEC has to say. I mean, they had all the information from very seasoned OTC investors, and they didn't really care too much about it. So let's see what happens. But it's an interesting market, to say the least, and it can create kind of opportunity in the end. So yeah, let's see what happens.
Well, I think we're all in agreement that the goal of combating fraud's not going to work, because the frauds are happy to report earnings and financials and book values. It's just that all those earnings, financials, and book values are fraudulent. And so they're going to put out news reports, and they'll happily comply with whatever because they're going to break the rules and it doesn't matter. But the area that I think you touched on that's really key is it might also exasperate the companies that aren't fraudulent but maybe have bad corporate governance in terms of the regard for minority shareholders. So do you think it's going to become important more going forward that if a company chooses to stay on the gray market versus take this as an opportunity to start reporting more publicly as perhaps a sign that they care more about corporate governance or not? Is that something that might be more of a marker going forward than it has been in the past?
I think, that could happen with some companies where they will choose to go current, maybe because they think that they have some kind of duty to the minority holders, or perhaps maybe it's even just because they want to kind of trade the shares that they own themselves, and think it's probably going to be better if they're kind of current in their reporting. But then equally, as Jan mentioned, a lot of these companies are small family-run companies, and they don't want to bear the cost of having to report with the SEC and go jump through all these hoops and spend all this money when they're not generating huge amounts of capital. So in that case, they're probably not going to be too concerned. I don't think it's the fact that the management is necessarily nefarious in nature and that they have kind of ill intent towards minority shareholders. It's just the fact that they're a small company. They rarely get contacted by shareholders because they're on the OTC markets. Sometimes when I contact a company, they're really happy to talk to me, but they'll say they haven't spoken to another shareholder in years, or they'll say they don't have an investor relations department. It's just kind of like one person, like the secretary I'll speak to. So yeah, I think a lot of these companies, they're just kind of they're focused on running the business. They don't necessarily have ill intent towards minority shareholders, but they don't want to bear the costs of becoming a public company. Now, so long as they still trade, it's not necessarily the end of the world. As I mentioned earlier, I think if they end up on the grey markets, if you can still trade these stocks, which certain brokers will allow you to do, then I think there could be even more interesting value opportunities arising. I mean, a really crazy one, which you guys will know about, which is Sonics and Materials, SIMA. It's SIMA is the ticker symbol. That's one that Dan Shum found, and that they were just kind of completely dark. And then the share price had a huge run up because it turned out that they were sat on a lot of cash and they were massively undervalued. But they were on the grey market, so no one really knew about them. But behind that stock that's on the grey market that people had kind of left for dead is actually a really high quality company that's a leader within its field. They do like ultrasonic welding, and that the guy basically that started the company kind of invented this technique, from what I've read. So you'll find these really interesting companies. And if people are willing to do the research and they're happy to trade stocks that are on the grey market, then I don't think it's the end of the world. But obviously, it's personal preference for what people are willing to do. But I think any OTC investors that are already in this space or that are interested in this space know that it's not like dealing in listed companies, but then you're not going to get the kind of returns that you see on the OTC markets if you're not willing to put in the work. And I think a lot of small investors that are smart, that have a value kind of slant, they're interested in looking for these kind of underfollowed companies that are really undervalued, and they're happy to hold them. We're not kind of we're not like day traders where we're going to be kind of buying and selling these stocks like every other day. We're happy to hold them. As Warren Buffett says, if you're buying stocks that you're happy to hold for 10 years, then it doesn't matter if the market's, if it's in a liquid market, it's not the end of the world.
So, one of the questions that
Can I just add one thing? A lot of times there's also the companies don't even have precise financials themselves. I mean, there's a lot of like smaller trusts or smaller asset plays that really don't even have to have like the most up-to-date financials assembled by themselves. They might have like an overview of what's been coming in as income and so on and so forth. But balance sheet, for example, I remember talking to this guy in Texas for one oil trust who said, well, the shareholders haven't met for like 10 years. They might end up meeting next year, and we might ask for like assessment of the assets that the trust owns, but shareholders don't want to spend money on this. So basically, like, we don't really have the most up-to-date assessment of the wealth. So I mean, it's just a lot of things that are, a lot of times not really knowable even by the company itself. So that was just the kind of like peculiar example to all of the discussion.
Yeah, that makes sense. I mean, when you're talking about companies like that might have a market cap of $1 million or $5 million, I mean, if you implement, $100,000 audit, I mean, that's a lot of money, So getting some of these financials can be an expensive exercise when the company is that small. I think the area that I want to kind of end on with this one is what changes, if any, have you maybe made to your portfolio or to your buying and selling habits since this announcement? And to frame that, I mean, for me, when this announcement came out, I owned two companies that were not current in their reporting, basically the red stop sign type companies in OTC markets. And I had an immediate thought. I was like, okay, well, what do I do? Because I know that this is new information that just came out and the market will eventually respond to it. So when they go gray market or they go expert market in 9 months, the liquidity could drop off or something like that. So I basically said, okay, I have a short period of time here where I might be able to liquidate a position before the market is ready to do so. And so for one of the positions, I ended up liquidating the position and I put all the money into the other position because I thought it was more favorable. And I thought it would eventually, of the two, be the one more likely to start reporting current information. Have either of you made any changes to your portfolio in light of the new information? Or has that caused you to change the companies that you'd be willing to put in money into? Or is it just business as usual?
Well, for me, it's business as usual. I specialize in looking at special situations, which generally have a shorter workout time. So that's not really a concern for those. And then the other companies that I invest in that are dark, I'm investing for the long haul with these companies. So I always I like to look for companies that are dark, but I think at some point in the future, things are going to be much better for the company. And it's far more likely that they'll be a reporting company. So I'm happy to hold these, even if they're kind of sat in my portfolio and I'm struggling to trade them. I'm not looking to kind of move in and out of these stocks frequently. I'm not going to have like a high turnover with my portfolio or anything like that. So I'll be happy to hold these companies if they end up on the grey markets. That's not a concern for me. Because valuation at that point is kind of what's important to me. Really, is kind of, well, either the underlying assets, that back the stock. So I'm not too concerned about the share price. So it doesn't really matter if there isn't like a current bid ask on the stock, as long as I know what's backing the share price, backing, sorry, the stock in terms of assets. Then that's the most important thing to me. And then with the other companies that I talked about earlier, where there's some kind of change taking place, in the first place, I was never really investing based upon the idea that there was some kind of asset value behind the company. I'm investing based upon it being a turnaround play. So it's a special situation that may take a lot longer to play out. So again, I'm happy to hold these companies if they end up on the grey markets. I think it's more of a concern for people that probably trade more frequently. They may think, well, do I really want to continue to hold stocks that are going to be in the grey market when I can't move in and out of them as frequently as I would like to? It's funny, I don't know if you've ever read the book by Nicholas Darvas. He started out buying these kind of really liquid companies, and he would look on, I think he even looked on the pink sheets, but he stopped trading them because he was a frequent trader. He liked to be nimble and move in and out of these companies very quickly. So obviously, depending on what your style is, then you'll have to make that decision. But personally, I've not really changed my approach or rebalanced my portfolio or anything. I've just continued as I am with buying these same kind of companies that have been left for dead.
What about you, Jan?
Yeah, so I would agree with David. I think it depends on your style and depends on what your liquidity situation and what kind of portfolio you're running. What's the percentage of the portfolio in the dark companies, and again how confident are you with holding them in the long run. Actually, may I ask, Trey, which one did you sell, the dark company? Because I guess that's okay to share.
Yeah, it was Northfield Precision.
Okay, fair enough.
The one that I could never convince David to buy it, but
yeah, I think, for example, with this, it's a manufacturing company, right? It's I think a lot of times, if it's a active business that has been going for some time, and it has some sort of history, and it also doesn't have like a completely bleak future. I think for people that are okay with holding it for a while, I think it's pretty okay. But I can completely understand that some people just want to make sure that they are liquid and that they're a bit more liquid and that they can manage the position. So it's just a matter of kind of how adventurous the investor is. And I personally hold some dark stocks. I don't invest as much into new ones, but that's more a matter of my current research focus, which is short selling rather than OTC. So basically, I will keep on holding, and these are positions, which I'm happy to hold like 5-10 years, whatever, because the catalyst might eventually be there and might eventually happen, and that's how I'm going to get the money. Let's say the hard way, rather than just selling the shares on the market, for example. So a lot of times, I think it's about looking at the catalyst and making sure that there is a possibility of some sort of exit or dividend or something like that, where the management, you're in touch with the management. I think it would be foolish to hold dark stocks, which you have no contact with the company and still you have some sort of meaningful position. So that's one thing. But I would also, for the adventurous investors, one of my brokerage accounts is just littered with like so many small dark companies where I own like a share or two, and I'm just like seeing what happens. So you can also do that if you're, into actually taking the updates and being up to date with the market. You can also do one thing that you just I don't know, spend $2,000 or something like that on buying single shares of many of the dark companies, which are not necessarily, let's say, the most expensive ones, but still $2,000 usually is okay to buy some of the most interesting ones, and there you go. You have a portfolio which might eventually lead you to some more opportunities. So there is that, but. Of course, also, I like to point out that I was offered shares over Seeking Alpha Chat,
with the Mills Music Trust. It was such a shame that I didn't take the deal. It was a good deal. The guy, basically, his father passed away, and he found out that he has a bunch of shares of Mills Music Trust in his name, and the physical certificates, right, we're talking about. And so he basically found me on Seeking Alpha because I wrote about the company, and I was like, oh yeah, it's a good buy. I own some, and I think the dividend is really cool, and blah blah. And he reached out to me and said, hey, like I have, I don't know, 10,000 or whatever the number was of $10,000 worth of the shares. Like, would you be interested in buying that? I can give you a discount to market price. And I was like, yeah. I mean, 10,000, that's not for me right now. I don't have that much money to invest into, a single stock. And he went away, and I think I just routed him to someone else, and he might as well sold it. I don't really know, but so there's always a way to get rid of your shares. So Seeking Alpha Chat could be one ways. But yeah, so it's a very peculiar market, and I guess it has very specific risks, and people who are not familiar with the market should be very careful when starting out and should read a lot about it. And it's not really for everyone, and especially due to the liquidity and so on and so forth. But I think that the ruling, it might change the market, but I think people will still invest, and people will still jump through whatever hoops to find investment opportunities. So that's kind of about it.
Well, it sounds like I'm the only one then that makes any changes based on it. But sometimes when you feel like you need to make a change, and that's usually a good sign, I think, that you probably should, or that something should change in your process. If you feel a strong effort there, you have to understand your feelings and how they affect your mindset. Fortunately, it's the stock I put it in is up 40% or 30% since I did that 6 weeks ago. So I'm pretty happy with the decision, but you never know how these things end up working out. So I think that really covers a lot of the key topics we wanted to address today. I want to give each of you time to both, put a little stamp on and final promotion for the OTC database manual, some final statements with it, and basically anywhere else you want people to find you or follow you. And then we'll end on, we have a special discount code exclusive for our listeners where they can use to sign up and get a discount for the service. So how about we start first with you, David, and then we'll give Jan the last word, and then I'll close this out.
Mm-hmm. Well, I think the database we've created is a really interesting product, and I think the price point is really reasonable. Obviously, with the discount, it's even more reasonable. It's something, it's an area that me and Jan are really passionate about, the OTC space. We've both independently been looking at this space for several years now, and all the hard work that we've put in with working through the OTC markets stock by stock basically just kind of removes a lot of the work that people have to do, because obviously I know a lot of people, they have families, they've got day jobs, they don't have time, or some people are just not really interested in like going through like thousands and thousands of stocks to try and find like this one interesting company amongst all this garbage. Me and Jan are obviously wired a certain way that we're like willing to do this stuff. But I think, we've created a really interesting database, and I think the comment section that we've got allowing people to interact with one another is a really good feature. And our plan is basically just to kind of build up the user base and create a real community around the product. And then also we're just going to keep adding more stocks and additional information. And if people request, other features to be added, we'll be happy to do that. And if people want to reach out and contact us, then they can get access to the manual. It's svendasmanual.com. They can also reach me on Twitter at Elementary Value. And then if people are interested in looking at some of the strange companies that I write up that trade on the OTC markets, they can find my blog, which is elementaryvalue.com, and I write up some of the companies. So going forward, I'm going to be probably writing up some of the companies that appear on the database, because there's quite a few interesting ones that I've actually come across, which I wasn't aware of initially, that was on Jan's list. And likewise, Jan's looking at some that I've uncovered that we've added. So I think, overall, there's quite an interesting list of companies for people to work through, and that's the list should grow over time. Not to a huge amount, I wouldn't have thought, because obviously there's a limit to the amount of interesting companies. But obviously there's always companies that are delisting, and there's companies that are cross-listing from abroad. So there's always things happening in the OTC space, and it's a really exciting and vibrant area for small investors to look at.
Okay, Jan, how about you?
Yeah, well, I would like to add, the access with the discount discount code costs about $150 per year. In that year, I think you will be able to find some nice stocks that will make you that subscription back. I think we have a wide variety of stocks, from many different opportunities. So if you're not that much into obscure stuff, don't you worry. There is some stuff for that for you in community banks or SEC reporting companies. If you are really into the illiquid and dark companies, I think there is also this stuff for you. So I think it's just a broad coverage of the OTC market, that OTC investors should just have access to. I am not aware of any other service that would provide such a thing. Again, you can do your research on your own. You can go through old blogs. You can go through blogs of David. You can scour my Seeking Alpha, where I write about like 70 or 80 stocks or so. But there is none database like that where you can really get a good coverage of the OTC market straight away, and you can kind of start researching whatever you want. So I think that's kind of the key thing to remember, that the access is reasonable, and you can find investment opportunities straight away, basically. And within a year, you will also see how the database will expand within terms of the features, also the stocks, and so on and so forth. So we have a lot of things ready, and we have a lot of things in the works as well that we are very excited about. So I think it's just a great place for OTC investors. If you want to contact me, also you can go to Twitter. That's just my name, Jan Svenda, and of course on svendamanual.com you can get access to the database. But that's I think most important things about the database, and where people can contact me and David. So thanks again, Trey, for inviting us on the show. I really enjoyed it. I'm always more than happy to talk about OTC stocks with anyone. So feel free to reach out. Thanks a lot.
Yeah, thank you both for joining us here. I mean, I think that it's really important to reiterate, I think the good value that is being offered with this manual. So I mean, your normal price is about $180 for a year subscription, and we have this exclusive discount code TREY, TREY. And if you use that code TREY as your coupon code, you'll get a discount on your annual subscription price. And that is, I think, very valuable to you, because when you're talking just over $150 a year with the discount, you're not talking about that much money in terms of investment capital. So if we're talking, the average U.S. investor, or the median income in the U.S. is $60,000 a year. That's $30 an hour over a course of a year. So if you can save 5 hours of your time using this database, then that's worth it. And even more so if you earn more money than that. And I think the other piece here is, even if you're investing a really small amount of money, starting out with, let's say $10,000 in capital, all you need to do is find a way to earn an extra 2% by investing in companies like this and having that as a good starting point. And of course, as you have larger sums of capital, you really get leverage over having access to new and different ideas. So I wanted to bring both Jan and David on the show because I think they've presented investors with a good solution on how to find stock ideas. And I think how to find stock ideas is a common, frequently asked question that I get from investors. So I appreciate the two of you coming on today to share this with my audience, because I think that not only are you promoting your own product, I think you're providing a good service to the investing marketplace, especially individual investors, where they can find an informational advantage, and they can use a smaller starting point to really dive down into the types of companies that intelligent, hardworking investors like yourselves are finding interesting. And it's good to use that as a starting point for their own process, if only because they will learn more by doing so. So thank you both for coming on the show. I'm glad you've both been able to be here. And I hope we can do this again in the future.
Thanks, Trey.
Thanks.
The DIY Investing Podcast is presented for general informational and entertainment purposes only. I have not considered your specific situation or risk profile, and I have not provided investment advice. The information presented on the DIY Investing Podcast should not be construed as investment advice. The views and opinions expressed on the DIY Investing Podcast are those of the participants and do not necessarily reflect those of the show's host or sponsors. DIY Investing, its producers, sponsors, and host, Trey Henniger, shall not be liable for losses resulting from investment decisions based upon information or viewpoints presented on the DIY Investing Podcast.